You're watching today's video technical update presented by FX Times. It is Thursday, March 4th, 2010. I'm Fan Yang, your technical analyst, and I'll go over some developments in the Forex market. Today I'll take a look at the Euro dollar, Pound dollar, Dollar Japanese yen, and the Aussie dollar US dollar pairs. Other updates can be found on www.fxtimes.com. This video is being produced at about 4:10 p.m. Eastern Time near the end of the US trading session. Starting with the euro dollar pair, we had a rally yesterday that broke our declining trend line, but the market immediately pulled back, and this is a very strong bearish candle, so it's making this retracement projection a little less likely. However, it's still viable. As you can see, two swing projection would bring us to our previous projection here at 1.38. So we'll see in the Asian session if the market indeed will bottom out here. See, 1.3550 is the previous power line here, and the market is holding now towards the end of the US session. As the Asian session starts and unravels, we'll see if the market can have a bullish rally. A bullish signal would spell a rally to 1.38, otherwise a decline would see support at 1.3450. Now going to the daily, if you break that 1.3450 area and the market is able to close below that, then we are likely heading into our next important significant support zone here just above 1.31. Okay, so again, the market is ranging. In the short term, it looks like there could be another leg up to retracement level here, but if the market continues to come down, look for support at 1.3450. If the market breaks below that, then the next target is 1.31, 1.30. Here's the pound dollar pair, which has been very bearish for a while now. As you can see here with the moving average, the intermediate under the long-term moving average. In the daily, we had that crossover here at the start of February, and now by start of March we already had a couple of swings. So the market here has paused at the 150% extended projection of this previous swing, which is also near this near the 61.8% retracement. So 1.50 right now is an important area, and if it holds up, 1.4950, 1.50, if that holds up, then the market might be able to attempt a rally. But any kind of bullish outlook at this moment should be kept in check and should require more than just one confirmation. And also it sees resistance at 1.51, 1.52. So the bullish outlook is very short term and needs very close attention. The bearish outlook requires a show of continuation and show that a return to bearish strength, which would be shown here if the market starts here to cross back down, roll over back down to the oversold area. Then the next target would be 1.4445, coincident 78.6% retracement and 200% extended projection of this previous rally here. So looking at the 4-hour time frame, some of the confirmations that we could get is a break of this current trend line at 1.50. A break of 1.4850 is an even better confirmation. It's a more thorough confirmation that this consolidation is over. Here, a quick pullback is over. We hit this declining trend line, and the market has a double top if it breaks down its base here. So it's a judgment call whether this is enough confirmation for the bearish decline. If in the Asian session, for example, if there is a bearish candlestick that's a strong candlestick such as this right here, you might want to pull out the ATR and see what your average range has been, and if your market is if the candlestick is above that or above 1.5 times your ATR, then that might qualify as a strong bearish signal, and that should give you more confidence in the decline, even if it doesn't come down to break the 1.4850 yet. But once again, to be conservative, a break below 1.4850 or would signify would be a stronger confirmation for your bearish outlook. Okay, so for now, wait, in the Asian session to see what happens. If there is a rally to the upside, you could still expect some topping action here in the previous power line here about 1.5350, and then 1.8% retracement, and also this previous support that we would be testing as resistance. Okay, so that's the two scenarios in the short term. If it breaks above, look for topping action here at 1.5350. If it breaks below our 1.50 area, it's judging what kind of price action there is. If it's a strong price action, then you might then the market might be on its way to the next target at 1.44, 1.45. Here's a look at the dollar-yen pair. We correctly anticipated a correction yesterday after this bullish divergence. So far, the market has shown only a temporary bullish outlook, bullish push, and the resistance of this declining trend line has held. So we have two outlooks. A break above, see some resistance here at the 90 to 90.50 area, and since the market has been very choppy, even that attempt keeps our projection to 87 viable. So here, if the market does show some more bullish attempt, and the market tops off here at 90.50, the 87 projection, now looking at the daily here, the 87 swing projection here to finish the bullish Gartley is still viable. Okay, so you do see this reversal signal here, but the key is to establish how long this how major this correction is. So far it's been very minor to the 38.2 or here probably 23.6% retracement next here. If it breaks that, it would come up probably to the 61% retracement area. So look for topping action here at the current level, but if in the Asian session, if a bullish candle breaks above, then look for topping action here at 90.95. However, if the bearish action starts already here and is able to break below a retracement area, if it's able to break below this previous bottom here, then our next swing is likely to go to the 87 area. But again, you notice that the dollar-yen pair has been very choppy lately, so don't be surprised to see a more full retracement than we have so far. Here's a final look at the Aussie dollar pair. Here's a 4-hour time frame, and we so far see a 38.2% pullback from this current swing. This swing is actually part of a bigger swing where, if you look at the daily time frame, that's the swing. This is part of a bigger swing that is projected to the 92 area, which is a 100% swing projection of this previous leg up. This is also a swing projection of a smaller swing after the current retracement if it's to the 61.8% area. And now looking back at the 4-hour time frame, we'll see what that means. So if the market continues to decline to the 61.8% area, which is where we would anticipate some bottoming action, 0.89 area, and then if the market rallies from that, you might want to use your 1-hour time frame to draw this trend line here. Counter trend, if the market breaks above this counter trend resistance, then we would have a very strong likelihood of a continued swing, and once again to the 92 area, even in this smaller degree. So looking at the daily, this smaller degree swing projection also goes to the 0.92 area. But we are in the middle of a near-term correction, so stalk this decline now and see if there will be bottoming action here in the next session. And that's it for today. Visit fxtimes.com for more fundamental and technical updates as well as educational live events. Once again, I'm Fan Yang, your technical analyst here at FX Times, wishing you good trading.